Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Tuesday, October 22nd, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. I'll start with the simple one. And this was, it'll be 2 weeks ago this Thursday that we settled below this 2-month channel bottom that is now well above the market at 252.32. That indicated 213.65 as a 2 to 3 week objective, 1 to 3 week depending on volatility, as it turned out to be a 1-day objective, really. The a robo-taxi event that night, the day that we actually settled below the 252.32 channel bottom, was less than anticipated and quickly resulted in this 213.65 initial target. This may be the ultimate target. We might round up from here into November trade. 213.65, the 5/8 Fibonacci from the August low against the September high. It has been tested, may well contain selling through next week, and above which you must allow for the possibility of this 252.32 formation over the next 2 to 3 weeks. Now, I've been saying that for over a week now with sideways trade. We had a buy signal on Friday's close. No real follow through yet on that. This hesitation, consolidation, I think ends with a settlement today above a newly formed, a near-term channel top at 226.24. So day trading, you can buy the 213.65 to 215 area. 215 is this longer-term trend line from the April against the August low. It is a range down to 213.65, able to contain weekly selling pressures, and above which 226.24 is likely this week, possibly today. We have these carefully chosen minor points. I can say that if we were to push through 223.43, a 226.24 is likely. We can top out here today. And there is the possibility, given the fact that it's over a week in the making, that we could fall away from here for several days, back to, 213.65 perhaps. 226.24 is also our aggressive upward pivot point into next week. If we were to close today above 226.24, we still have 233.27 as a session containment level. So closing above 226.24, 233.27 likely the very next day. And yes, within a couple of weeks of closing above 226.24, the 252.32 former channel bottom in reach again, where we could top out by that point in time through the rest of November and fall away again. There is this scenario that I mentioned many times, and that was the settlement below the 252.32 channel bottom 2 weeks ago this Thursday may actually what's the right word I'm looking for? May actually result in a couple of months bearish continuation back into the mid 170s. And I even mentioned that that's a play that you could play. Now I know I'm being redundant here, but what I'm saying is that is a signal that you could play. And I mentioned that at the time, that the settlement below 252.32 you may consider having reached for, say, 175 strike out of the money puts that don't expire for at least 3 or 4 months, given this 1 to 2 month possibility becomes a probability if we were to settle today below 213.65. So in terms of the downside, closing below 213.65, I would anticipate 203.87 within the week. 191.76, the low settlement price in August, within a couple of weeks. And over the next 3 to 5 weeks or sooner, following a settlement below 213.65, 175.97 is likely. So if you've been bottom picking the market for the last week and a half in this 213.65 area, anticipating a bullish continuation over the next several weeks into the low 250s, just know that closing below 213.65, my advice would be to exit that long position and consider playing the short side, which may may involve just reaching for 175 strike out of the money puts that don't expire for at least a couple months, 2 to 3 months. That's a solid 3 to 5 week play to the downside. Until then, if you're long, you can stay long. If you're not long yet, you can get long with a settlement today above 226.24, anticipating then 252.32 within a couple of weeks, where we could top out through the balance of November trade. I will say there are a few things going on here, but we also have a rising channel top in the mid 270s. Why am I going there? I'm not so sure right now. I don't really want to. I don't really need to go there just yet because there's no real point to it. That becomes an objective above 252.32. I think what I will say is I'll go back to this chart. If you can see that this 252.32 is rising into the 270s by the middle of November over the next 3 or 4 weeks. It's not converging yet with 274.38, but I think that does occur at the end of December. So what am I saying? I'm saying that we could top out here at 252.32, back off modestly, turn back up again perhaps. I mean, it will be an increasingly significant range of resistance that will begin at the 252.32 formation and end at 274.38 rising weekly. Really what I'm trying to say here is I like to present the big picture, right? And the question on a lot of people's minds is, are we going to see much higher trade? Are we going to see 335, for instance, this long-term channel top in Tesla in the months ahead? And my answer to that is yes, if we can close above this 274.38 channel top over the next month or so. Then we're off to the races, and we should see 335.19 by February or sooner. Until then, this is, by one measure, with the settlement below the 2-month channel bottom, a heavy market that actually allows 175.97 over the next couple of months, which becomes clarified as a clear-cut signal following a settlement today below 213.65. I'm going to say one more thing about 226.24, solid level for day traders, even 2 to 3 day swing traders. We could fall back into the mid 210s following a settlement above 226.24. But after having tested 213.65 and closing then above 226.24, I see no good reason to be short Tesla as we move through the rest of October. The next couple of weeks then in reach of this 252.32 former channel bottom, where profits can be taken and a short sale placed as we continue into later November. I think that pretty much summarizes it. I'm going to leave it at that for Tuesday's Tesla report. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. Daily Triple Q, Daily SPY, 2 stock picks a week. If you like to trade the stocks longer term, 3 to 5 week out to 3 to 5 month time horizons, always looking for 20% plus moves on those stock picks. So they're carefully chosen for that specific purpose. Sometimes we find a stock pick that looks beautiful, but it's only going to offer a 10% move before it hits the next critical resistance threshold. So we don't bother. We look for one that's got clear room to the upside following a buy signal. And so that's really what we're always looking for. That's why I say always looking for at least a 20% move on those underlying stocks, because that's the truth. I'm going to leave it at that for Tuesday's Tesla report. I'll be back tomorrow, of course, with Wednesdays. You have a great evening.